I'm now joined at the desk by Mark Stevens, Chairman of SA REIT Marketing Committee, for a look at the risks of unregulated property schemes. Good to have you with us today, Mark. Maybe when we talk about unregulated property schemes, people often aren't familiar with them and might not be able to discern between them and what a REIT is. If you can unpack that for us further, please.
Sure. Okay, thank you. We as the Marketing Association of SA REIT have really attempted to go to the general market. And when I say general market, I'm not talking about the big institutional investors. I'm talking about the private people, private small investors, either pensioners, people who have got their first paycheck, who actually want to save it. And we're saying, if you're going to invest money, and in particular in property, look where you put your investments. Don't necessarily run to the first property investment that comes across your desk. And there are a lot of investments if you look at them. I mean, if you literally page through most Sunday newspaper publications and you go towards the back, you see advertisements for property schemes. Yeah. And I don't necessarily want to use the word syndications because it does give a very negative connotation to syndications, and there are some good syndications. But what we're saying is, if you're going to invest in commercial, retail property, do your homework. There are schemes out there that have failed. There are schemes out there that have been in protracted legal issues that have been ongoing for years. And we're saying, if you're going to invest money, invest your money where you know there's proper regulation, there are professionals that have been doing it for a long time, there's see-through structures that you can have easy access to. And you know, once again, as I say, if one looks at property schemes, and let's use the word syndication for the moment. The syndications that have been operating have literally preyed on an unsuspectable market. Generally, people who have been promised high yields, probably been shown very pretty pictures of properties. They've never seen the property, and they've never been able to do a proper due diligence. But I think the sales have been aggressive sales. I think the people doing the selling have been earning big commissions, maybe commissions that are out of kilter with where commissions should be earned for those type of products. And I think a lot of people have come very, very short. If you read the Saturday newspapers, I know there's been an ongoing saga in particular relating to some of the schemes, and there have been some very unhappy endings, suicides, over people losing their nest eggs, all the savings they've had, by putting them into schemes that were ill-conceived to start off with. They can't get their money out of the schemes. And we're saying, if you're looking at investments, please consider the stock exchange. Please look at the listed property stocks and the SA REIT members of those listed companies.
Because it's a well-regulated market, as you mentioned, it mitigates the risks,
very
and
well
the information
regulated.
is clear and is also presented to you in a very clear format. I want us to touch on the opportunity of going offshore, though, because a lot of South African investors often want that kind of diversification. 100%.
Look, the SA REITs are administered by the stock exchange, so that's the big daddy that wields the stick. So you have around 30-odd companies listed under REITs. There are more property companies, very, very good companies, not REITs, but not REITs for very good reasons. But there are approximately 50 companies listed on the stock exchange. If we just concentrate on the REITs for the moment, so REITs mean that they are locally listed, they have their primary listing here on the stock exchange. And if you look at those companies, I would say at least half of them have some form of offshore exposure. And that offshore exposure is investments in other listed companies, either based in the UK, Mauritius, the States, literally anywhere in the world. So if you as an investor saying, yes, I want to be invested in property, I like property, but it's important for me to have access to either dollar, euro, or whatever other investments. If you look at the REIT Association, a lot of these companies have some very substantial investments in those markets, whereby you won't necessarily get a dollar income, but you'll get a dollar converted to rand income, almost acting as a rand hedge. And there's a big exposure to it. You know, South Africa has now become part of the global markets. REITdom is not a South African club. It's a worldwide club, and we've not just recently joined it. I think we're the 9th member of the REIT club worldwide, and it's just more access, better access to world markets for South Africans.
Mark, just in 30 seconds, because we've run out of time, unfortunately. Emira recently made a move into a REIT. It has always been a listed firm. And we spoke to James Templeton, the chief executive, in this week, and he mentioned that in the end result is that this is better for the investor.
Definitely better for the investor. The tax implications, which does make it better for James, but what it means is he moves from an FSB regulated environment, and he now moves into a REIT regulated environment. For the investor, I think a better and easier and a more comfortable structure going forward.
Mark, thank you so much for your time today.